I've been thinking a lot through this. Actually, I'm trying to think like 10 or 20 years ahead. Okay, so let's say the Bitcoin maximalists are right and Bitcoin is the predominant store value in currency. Well, in that world, it becomes the denominator against which we judge all assets. Inflationary that it goes up in price all the time. It means that everybody else will only put their money in Bitcoin and not other assets, unless you get short-term cyclical moves in other assets. That would tend to make Bitcoin outperform all assets, which stops all productive use of capital. It drives M2, money supply, Bitcoin money supply to zero. So I don't think it's healthy over the long run for it to be a deflationary asset. We kind of are stuck in this inflation-deflation world that we live in right now. That there's a huge bunch of debtors, so people don't want deflation, and then savers want deflation but not inflation. But if we go into a world where the denominator keeps going up against everything, everything else deflates against it, that's a problem because as a business, you earn less and less money every year. So I don't entirely believe that this is a good thing. And for this reason, one of the reasons, I don't believe that it is the only asset. I think it is a pristine asset. It has attributes, but it won't be macroeconomists and Real Vision founder Raoul Pal is extremely bullish on. Cryptocurrency, but one asset in particular, Ethereum, he believes not only Ethereum but the entire crypto space can pull a 200x over the next decade. In an interview with Dr. Julian Host, Raoul broke down the potential consequences of Bitcoin becoming the predominant store of value in currency. He expresses concern about Bitcoin's deflationary nature, which could lead to an unhealthy concentration of capital, hindering productive use. Ethereum has now also gone deflationary, which is why Raoul doesn't believe it will be a zero-sum game with one predominant crypto asset, but a digital world in which there will be many. Raoul also talks about the importance of network effects in the crypto space and challenges the Bitcoin maximalist view that utility tokens will trade at the cost of electricity. He believes that the entire crypto space can grow massively due to adoption effects and the development of a parallel financial system. I want you to arrange the given article in sentence case. Make sure to stick around to the end of the video where I will break down Raoul's argument. Also, Raoul discusses which altcoin he sees value in outside of Bitcoin and Ethereum. Only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free, and you can always change your mind. Yeah, I just don't buy into that argument. I understand there's a probability of it, so I'm not saying it's a 0% chance. There is a probability. This whole idea that anything that is a utility trades at the cost of electricity, I just think is false. I think it's false because of Metcalfe's law adoption effects, and we've seen that time and time again. Now, when John Pfeffer wrote the paper that everybody refers to, every Bitcoin maximums holds it was like, here is the prophet of truth. He basically wrote off network effects, so I went and proved it that network. Effects operate perfectly in Ethereum. In fact, it operates in every one of these. In fact, all new technologies are network effect driven, so I don't believe that utilities have zero function. Some are badly designed made in, but most I don't believe will. The hard question is which ones are going to succeed and which ones aren't. I don't know the answer to that, so there is a maximum school of thought that we all got caught out in 2017 because we bought these tokens and they went to zero. Guess what? They were all early stage projects. And if you understand how the VC world works, 80% of what you invest in is going to go to zero or go nowhere. And it's really the 20, 10, and 5 that you make the money in. So what was the one out of 2000 that did well out of 2017? Ethereum. Will it outperform Bitcoin over time? Who knows? I think for a period of time, certainly, and I think over a longer period of time, probably so. How I look at this is Bitcoin is currently $1 trillion-ish, and the rest of the space is called $700 or $800 million. If I look at the equity space, or the fixed income space, or the credit space globally, they're all about 300 to 500 trillion. So if this is truly as destructive as we think it is, which the Internet of Value is, then it's going to be worth something like that, if not more. So the whole space looks like it can go up 200x from here, at least. Okay, that's, we've never had this before, a whole asset class going up 200x. But that's what adoption effects do. And that's what this whole parallel system that's being built, we've got this broken system that we live in. Now, whether you're a European, Japanese American, we all know that we've got this debt burden system where the banking system doesn't function. there's a terrible disparity between the rich and the poor. Wages aren't increasing. All of the problems that we've got. Then over here, there's a bunch of really smart people in the thousands or tens of thousands who are building an alternative system, and people are slowly migrating across. And that is not just a system of money, and that's where a lot of the Bitcoin people get confused between money and value. Assets have value. They don't have to be money. A Picasso is not money, it is value. So I think those two things are different, and I think once the whole space builds interoperability, you and I won't care what platform we're buying and selling or streaming on. You'll be streaming for money in real-time payments, and you don't care whether it's on Tron, whatever. I mean, it's irrelevant to you as long as you get paid whatever source of money you want, be it Bitcoin or euros or dollars or whatever you choose. That's it. It's that early stage of people are fighting over the wrong thing. I see value in the space. I'm not smart enough. I don't have enough bandwidth to go through all of these because they all sound super interesting, right? Everything's like, oh my God, that's incredible. Oh wow, that sounds amazing. The problem is, what's going to get network effects and what's not? What's going to find the use cases? What's going to find the developers? I don't know. Ethereum, for sure. I mean, that's a surefire major platform that is going to play a major part in the future. Regulation is so far behind what is going on. Again, go to the gaming world where there is gambling, there is earning money, there is all of this stuff, right? It's non-regulated. The gambling side is slightly regulated depending where it is. It's all non-regulated, so it's moving really fast. Regulation is so far behind. They still are calling things securities versus non-securities, which are rules that came out in the 1930s, right? The whole regulated rulebook is going to get ripped up and thrown out and redefined. It has to happen. This is not a marginal thing that's coming at the periphery of the financial system. This is most likely, in my view, to be the future of the entire system. So you're going to have to rewrite the rules, and that's okay, but they're a long way behind that. But they will get it once you know the ECB, the Fed, and everybody else are introducing digital currencies. They're going to realize that that whole world is gone, and everything has changed. So the whole regulatory rulebook is going to get rewritten over the next 5 to 10 years. So yes, it's slow to get stuff like real estate tokenization off the ground. Certain jurisdictions could do it. Certain people can't. That's okay. It'll come, I think there's too much happening already to keep our eye on than having to think about all of this as well. I think it is happening, and I could talk about this migration. There is a new world. We've just found America. And people are moving, and all the frontier guys you and I were already spending time there. So it's going to rebalance the power of the world with this new digital world, because this is a new financial system that has a better chance of working, and it may continue to work for another 50 or 100 years, who knows. So I think it ends with a whimper and not a bang, if it was going to imply that I had a serious sit-down with myself, because I thought the next recession. So a few years ago, the next recession short the crypto worlds, and the macro world would collide because of debt. But what happened was we had the biggest recession any of us will ever live through, and nothing happened. I'm like, wow. But what did happen was asset prices accelerated because denominated in the G4 central bank balance sheets. They outperformed, yet they were just offsetting it. So if you look at the S&P or the Euro stocks or whatever you want to do, divide it by, let's say, the S&P divided by the Fed balance sheet, is exactly what we have in our heads, which is after 2008 it just traded sideways. But on the chart, I did that it's because the denominator is wrong. People were like, oh, it's going to debase the dollar. Yesterday based the dollar and the euro and the yen and the RMB and the Aussie dollar and the South African rand at the same time. That's what people don't understand. So that is going on. The governments have 3 choices in central banks, which is taxation increases, which is going to happen. There is inflation, so yield curve control, trying to get the economy to run hot. I don't think they're ever going to get the economy to run hot. Not for a while, meaning maybe a decade or longer, and secondly, and then thirdly, it's to try and monetize debts in different ways by debasing your currency, okay. So all of those 3 things are going to force us to migrate. Every one of those forces us to migrate. So we all migrate across, but we're now backward looking, and we're all looking at this world behind us that's crumbling. And I'm looking forwards, and I'm a big believer in the Neil Strauss's Forthtelling the book, which I think, if people here haven't read it, they must read this book. It's exceptional, and it's prophetic. It's incredible. And he talks about that. Yeah, and Neil's a good guy, and he talks about that. And new institutions, new regulations, new frameworks, new ways of doing things come out. So, if you think the last time this happened, it was after World War II. Everything from the IMF to the World Bank to the WHO to the United Nations, I mean, you name it, the entire rules-based global order system came out of World War II. So now if we look ahead, I've been putting a list because I'm writing Global Macro Investor this weekend. So what we've got coming in the next 10 years is probably the biggest thing we will ever see in terms of change. I mean, literally everything is about to change. I'm actually getting very optimistic that I think we end with a whimper and not a bang. We don't blow up. We just transitioned, and we transitioned to something. It's going to be a different world. It's going to be hard to get our heads around. It's going to have social issues. You know, if you're getting paid an income for not working, your propensity to feel worthless, it's pretty high. You're going to have to change structures of society. So I think a lot is changing here. So I'm pretty excited. And I think this whole digital asset space is just one part of the size of it, and it kind of all blends together. Cool, that's exciting. Any other books? Besides the fourth thing, that are Jeff Booth's book, The Price of Tomorrow, and it are about the population of technology. I think that's definitely well worth reading. Because it kind of captures the big picture. I think both Sapiens and Ex Deus the two books, are definitely worth reading to just get your heads around where this is. So, there's why Raul believes a 200x is coming for the space, and his predominant bet is on Ethereum. Anyone that is familiar with venture investing or investing in startups knows that there is a huge fail rate amongst new ventures. It's no different in the cryptocurrency world. However, Ethereum has well and truly surpassed the unknown stage, and with things such as the Lindy effect, which is a theory that the future life expectancy of a technology or an idea is proportional to their current age. In simple terms, the longer a technology has been around and remains dominant, the more likely it will continue to be the leading or predominant technology. The Lindy effect emphasizes that this survival of these entities is a function of time, with their endurance increasing as they continue to exist. With Ethereum being the leading smart contract network for nearly 8 years now, it has path dependence on its side. But what do you guys think? Do you agree with Raul's 200x prediction for the space? And is Ethereum the best risk-to-reward bet? Let me know in the comments. Anyway guys, hope you all enjoyed today's video and that it provided you with some value. I'll see you all on the next one, and as always, all the best. Foreign.